Thank you very much, everyone. Let me know if you can't hear us or understand us. I know this room's a little echoey, but we'll do our best. So thank you for joining us on today's panel, The Future of Digital Infrastructure in the APAC region. We're going to talk about financing, strategy, and innovation. So obviously, the data center market in the APAC region is undergoing a massive transformational phase. It's shaped by rising demand for AI, a growing hyperscaler footprint, and of course, regional complexities in power, regulation, and ESG pressures. So today we're joined by a group of experienced CEOs and CFOs who are right at the center of this evolution. We're going to explore and discuss how financing models are shifting, and what strategic decisions are being made on the ground, as well as how innovation is really reshaping this sector. So without further ado, let me introduce the panel. To my left, we have Jonathan King. Jonathan is the Group Chief Strategy and Investment Officer of ST Telemedia, GDC. He's responsible for leading the growth of ST GDC into new regions, in addition to managing the existing portfolio of investments. Since joining, Jonathan has been leading the establishment and expansion of STT's data centers platforms into 12 geographies with significant presence in both Asia and Europe. He has over 25 years of global investment experience in the data center space, in finance, real estate, and engineering, and he has led over $5 billion of transactions since 2011. And to my father, we have Raji. He is the CEO of ZR Power Holdings. ZR Power Holdings is building out sustainable, efficient, and responsible projects in the energy and digital infrastructure space in India and the Middle East. He's leveraging on his extensive experience in the clean energy sector to really grow the business and really expand the sector in these areas. So let us kick off the discussion with a quick description and discussion around the data center space in the APAC region. So Jonathan, maybe I can direct the first question to you. So APAC is one of the fastest growing regions for data center demand globally. From your vantage point, what makes this region particularly compelling right now?
Yeah, thanks for having us. I know this conference has got a lot of people focused on North America, on Europe, and there isn't that much of a time to the Asia-Pac market. But I think, as you said, Jacqueline, it's a very, very fast-growing market, and it's a much more nuanced market, I would argue, than potentially Europe and North America. As many of you know, different countries in Asia are anything but homogeneous. You know, you do business in Thailand and you do business in India, it might as well be Mars and Mercury. So how you execute a business strategy, how you finance data centers in these markets is anything but straightforward. Having said that, you know, the Asia-Pacific population and population growth and the number of data centers per capita, any metric you want to look at, Asia-Pacific is highly underserved in terms of data center and digital infrastructure. But yet the underlying demand from consumers, from businesses, from governments is just as strong as anywhere else in the market. So there is a huge opportunity and a huge digital infrastructure gap in Asia-Pacific. In terms of demand, where it's coming from, again, I would argue it's a little bit nuanced in that we have on one side, at the top end of town, you have the Western hyperscalers, Google's, Microsoft's, your Amazons, all into winning the Asia-Pacific market. But you've also got just as important and probably just as high growth as the Chinese and Eastern hyperscalers, which are very, very focused on the Asian market to expand outside of China. So from a demand vector perspective, you've got two very large segments that are looking to grow in the market. You've also got obviously governments that are increasingly looking at data sovereignty and more protectionist policy around the Asian markets that causes significant government-led demand and something that is a real opportunity for providers of digital infrastructure. And obviously the typical enterprise and private cloud markets that we see in the Northern Hemisphere is also a big opportunity. That's the demand side. The execution side is anything but straightforward. There's a significant uncertainty in the world, I don't need to tell anyone here, around tariffs, around protectionism, around geopolitical issues, and things like the Diffusion Act, which is trying to divert artificial intelligence and know-how and chips away from certain countries to others. Certainly creates a very complex environment for operators like STT-GDC to operate in. And then, of course, when you look at the financing and what risk are you really taking when you're sitting behind these businesses from an equity, from a debt perspective. I'm sure we'll talk a bit more about it, but yeah, it's quite nuanced and a lot to discuss on that.
I think that's one thing that I always take away from, especially what you said. One factoid is 60% of the world's population is in the APAC region, but yet the complexity of the jurisdictions of the countries involved in trying to finance or grow across the regions where nothing is homogenous, all this leads to an extraordinary difficulty and complexity in the actual execution of transactions there. Zain, I'm going to turn to you. Perhaps I could ask you the same question about what you think is so compelling about the region that we are seeing this massive growth, particularly in the Middle East. What do you think makes the Middle East such a compelling region right now? Middle East and India, compelling region right now for growth?
Yes, of course. The thing is that India and Middle East share a common analogy in terms of, like you said, Mr. Jonathan rightly said that the focus right now is in Europe and America, but India's population of 1.7 billion people. And just like China, we have mass smartphone integration, and 90% of people consume data through their phones. And most of India's data now, I would say 50% or more, lies in Singapore at the moment. We have enough power, we have plenty of power, and we have the population, and we definitely need the data centers to be based in India. We have a data sovereignty law basically passed that by 2030, we need to have most of India's data stay in India, especially critical data like banking data and things like that. And when it comes to the Middle East, they have similar rules. For example, the United Arab Emirates, during COVID, there was a law passed that even the data of Dubai must stay in Dubai and it cannot be in another data center in Abu Dhabi, which is maybe an hour flight away. So that is one of those complexities there. So because of this data sovereignty and rules of protecting the data within the region, we're seeing a massive growth in data centers. We have most of the world's big players come now to India and of course the Middle East. It's driven usually by local demand, and most people are people like myself who are usually energy producers and developers. Now we've got into data centers. We got into data centers 4 or 5 years ago, and we see what we were planning was say 100 megawatts or 3 years. Now that has changed, that's around tripled. Just because of the mass adoption of people using smartphones and people being addicted to data. Like in India, we say now data is the new oil. So that's leading to a lot of investment funds, sovereign wealth funds, all of them coming towards our region. And besides the likes of dissects, which is an SCT, I believe we have a lot of sovereign wealth funds in the GCC region, which is the Middle Eastern region, like RDR, QI. Those sovereign wealth funds are now looking at investing directly into companies and not via other funds. So they want to build their own sort of assets, like our Digital Bridge has their own, and they are equipped with hundreds of billions of dollars of capital, and they have that dry powder which they have to deploy in the next 1 to 2 years.
We've definitely seen the Middle East as a massive source of capital, not just for the Middle East located data centers, but obviously the US. They're spending, I'm sure that will be some of the deals being announced this week, when it comes through. So let's move on to talk about how the capital stack is changing for APAC data centers and the infrastructure there. And let's talk about the financing instruments being used for these markets. So again, Jonathan, maybe I can ask you, let's talk about the capital formation shift that's been happening in the last 5 years. How have you seen the profile of capital entering digital infrastructure in APAC evolve over the last 5 years? And what do you think are the kind of investors in the APAC region who are now shaping this space?
I think similar to the other parts of the world, the biggest driver of innovation is need, and the quantum of capital that we need now to build out the digital infrastructure in APAC, that's like other parts of the world, is multiple tenfold what it used to be. But that creates opportunity, and I think that we also see, similar to the Northern Hemisphere, the public capital markets. There aren't many listed data center companies anymore. In the Asia-Pac region, there's NextDC, there's a couple of REITs in Singapore, but really the public capital markets have not been the ones funding the growth so far. Whether they will or not moving forward, that's a different question, but they certainly haven't been the providers of capital. I think we've seen, obviously I represent Temasek, the Sovereign Wealth Fund of Singapore, and they've certainly been, for the last 10 or 11 years, been very active in providing capital for our platform to grow. I think we've seen some other sovereign wealth funds like GIC that have been very active in the space as well, not just in Asia, but in Europe and the US. But I think most recently we've seen significant influx of infrastructure funds, private equity funds, that have really come in and made some very big bets on platforms in Asia. People like Blackstone have come into the air trunk business. We've recently brought in, which is publicly disclosed, KKR into our business. So we're seeing a very large shift towards those large infrastructure funds coming into Asia. And so that's been a change. I think it definitely drives potentially some different strategies around time horizons. I think it's also a very interesting look when you see data center projects are becoming much longer gestation. The time between buying a piece of land and getting EBITDA realization is getting longer. And so how are these new capital providers? They need patience. It's not a matter of a quick fix anymore, because you're not building 20, 15, 20 megawatt data centers. You're building 100, 200 megawatts. So I think we're seeing that as being, a curveball that some of these investors need to adjust to. But certainly the influx of the institutional capital has really changed the game so far in the Asia-Pac space.
So let me clarify that. So do you think that sovereign wealth funds were predominantly the seeders of the APAC digital infrastructure in the first place, and then now there's some institutional capital coming?
Look, I think in the Singapore context, I would say yes. I think GIC and Temasek were one of the leaders. We're talking 10 years ago, 10 or 11 years ago. And you didn't really see any funds backed by the large US, particularly the US or even European infrastructure or private equity funds. But in the last 3 to 4 years, you've seen a very, very significant shift there. And you're seeing a lot of the Stonepeaks, the KKRs, the Blackstones, the BlackRocks, all into deploy capital. I think the other thing I would say too is, again, the nature of Asia Pacific is you also see some Eastern capital, other investment firms that predominantly come out of China, also looking to try and get into the Asian data center market, which is, again, back to my point about geopolitical tensions, makes it a tricky discussion, but certainly another pool of capital that is trying to find a way to invest.
I think in that sense, the APAC region is a little bit behind in terms of the cycle compared to Europe and the US, where I think institutional capital has been in there for a while, and so it's starting to cycle out. So it's going to be interesting to see what happens in APAC, given that it's long-term capital like SOEs and state-owned funds first, and then with institutional capital coming in, we'll have to see what happens when they try to cycle out. I guess over to you, Zane, in the markets that you're involved in, what's been the role of sovereign wealth funds and state-owned enterprises and things like that in financing or investing in the markets that you're seeing?
Yeah, I think that sovereign wealth funds, for example, like I mentioned earlier, Abu Dhabi Investment Authority and QIA, from what I learned from them, is they are very keen data center because they realize it's the backbone of digital infrastructure, and AI can't work without them. And AI being a buzzword even in Davos this year, AI being the central theme of the entire World Economic Forum. So they realize that this is an opportunity they can't miss out on. They shouldn't. Companies like Temasek and of course the sovereign wealth funds of Singapore, they've already been ahead of the curve. But now the others, on my side of the globe, which is the Middle East, realize that they can't miss out on this opportunity. They have that kind of patient capital, like Mr. Jonathan was mentioning earlier. They don't mind waiting and seeing the build-out, which takes usually 2 to 3 years, given the challenges of land and power and socio-economic situations. So they have that sort of patience, and definitely the funds which are required for these kind of AI data centers, which are in the multiples of 50s and hundreds of megawatts. And to add to that, Saudi Arabia, for example, wants to be the data center or AI leader of the world, and they're competing with other regions like UAE. For example, the United Arab Emirates has the only AI ministry in the world. There's a Minister for Artificial Intelligence, and the entire GCC likes to, they all want to be the leader of AI, so they have to have the data centers there. And of course, not just the sovereign wealth funds of the region are not just investing in the Middle East or India for that matter. They invest globally, but they would like to keep their data centers and their investments in their region where they have control and where, of course, the companies are set up.
Yeah, I can see that. So let me move on to ask about financing structures. Given the scale of capex required for hyperscale deployments, are we seeing a shift, Jonathan, away from traditional project finance to more hybrid structures like that of holdco financing, portfolio level debt, MES? What do you see?
Yeah, I think we've seen a very significant maturing of the debt financing market in Asia. I recall my grey hairs will attest to my first time speaking to a bank in about 2009 about data centers, and sitting in front of me were about 15 bankers in this one bank. I said, what are you all doing here? And they said, well, this group's from real estate, this group's from infrastructure, these guys are from telco, and these guys are from technology. We don't know what a data center is, we don't know what part of the bank we sit in, so we've got everybody along and hopefully we can help them. Thankfully that's moved on. So traditional financing now, we've had some great panelists in this room talk about SMBC and others. There's a dedicated data center financing for the right sort of projects. So that's been a good development in the sector. But I think what we're seeing now in Singapore, we've got a fairly significant bond market, and so we've been able to tap green bonds. We have about $2.5 billion of green bond debt across our portfolio. We've also seen some more innovative structures around perpetual bonds. So there's in some parts of Asia, you see some capital markets that have caught up, and I would argue, leading in some aspects. But having said that, again, the nature of the Asia-Pac market, if you want to finance a project in Vietnam versus financing a project in Korea, your banks that you can go to, the structures that you've got, the strategies that you've got are incredibly different. So it's very different, with all due respect to my US colleagues, funding a project in Ashburn versus Dallas. It's not the same. And the structures, the banks, the capital providers. So I think in pockets of Asia-Pac, to answer your question, you're seeing some innovative structures and financing structures come out. But I think with a lot of this topic, you can't apply that across all of Asia-Pac. Not yet.
Not yet, definitely. And between the different enforcement mechanics and security, and we're not to talk even about currency and hedging.
That's why we hire Milgram to help us.
Exactly. That's why we still have a job, and AI hasn't taken it over yet. So let me ask you, I guess, what do you see about the impact of rising interest rates, and how does that impact liquidity environments that you see available for your infrastructure investments right now?
Yes, the interest rates, of course, are a challenge, but there are so many other solutions. And of course, there are a lot of companies, like in the previous session, people are going to the markets, people are listing, so they are trying to avoid the high interest rate. But interest rates for good assets and things like our data centers, which are pre-leased and have good ratings, I think they're favorable. They're not that as bad as you listing. Project finance, yes. Once the data center is up and running and generating revenue, you can always refinance it for better rates, and like Mr. Johnson said, green bonds are a great way to do it. Sustainable finances, if you were today's example, Standard Chartered Bank itself as an entire sustainable banking division, which doesn't only finance green energy projects like what we also do. They also finance data centers, anything sustainable. HSBC, for example, has a mechanism which a regular person goes and deposits in the bank. You can have a regular bank account or a green savings bank account. So that money is deployed again towards sustainable solutions. So with these innovative ways to raise green capital, the kind of capital that, for example, a green data center, like what we're building, 80% of our data centers are all green, powered by hydro, wind, solar, and winds. So I think, of course, interest rates will get better, and you can't really do without them if you're starting off with a lot of debt in the beginning. But of course, once the project's up and running, you can definitely refinance them.
So I think given that there's a strong availability of financing, I guess you also see that jumping as well across the rest of the APAC market. Let me move a little bit into strategy around power. Power availability and cost are critical constraints as always. How are you finding management of power procurement strategies? How do you include renewables, PPAs, on-site generation as part of the growth model? What are you doing about that?
Yeah, I think from an expertise perspective, data center companies, you need to have power expertise now. Your power procurement, your strategy around green power, that's an expertise that wasn't really required in data centers 5 to 7 years ago. So I think from an expertise perspective, that's changed the nature of what a data center company needs to be good at. From our perspective, obviously power is a challenging topic. It's something that we spend a lot of time thinking about. We obviously have set our sustainability targets for net zero by 2030, and so in terms of how we attain our sustainability targets is one aspect. But in some markets, it's actually much simpler than that. Can you actually get access to electrons? So the green element is one piece. But in markets like Singapore, there is actually a government-led moratorium. There are no data centers that are allowed to be built unless they're done through very controlled and very selective selection processes. So we have to work very closely with our customers around what the constraints are in each of the different markets across Asia, and they are all different. Again, same thing. And make sure that we understand where our customers want to grow, the constraints that we face to the constraints that they face. There's no point from a hyperscaler perspective saying, I want to put 500 megawatts in Singapore. The government will not let them do it. So we have to look across all of our markets and make sure that we've got the right runway to access electrons. We've got to make sure that we've got our renewable strategy, our PPA position, our behind-the-wire solutions, actually bring your own power. There's a lot of work we're doing in our Centre of Excellence on that at the moment. So this topic has made this business a lot more complicated, and I think it's you certainly need to have your wits about you as you navigate that, because that's going to be a very, very key success factor moving forward.
And what about easing? You've got a history you've got a background in clean energy. How are you seeing it in your markets? How's that playing out?
I believe our country is blessed with a lot of solar, wind and hydropower. For example, India, where I'm from. It's like Canada, for example, they're planning a lot of data centers around the hydropower plants. They do the same in Norway. And India is now understanding that the model can be repeated. And if there's low latency, you can have a data center close to a hydropower plant. And given the low latency, it could be a success, because we all have those targets by 2030 to get net zero. But I think the time is now, actually, to sort of. Everyone knows data centers' main requirement is power, and that's the biggest challenge. We're not looked at very nicely in most parts of the world. Even in a developing economy like India, people aren't happy that that such huge amounts of power are going to data centers. And if you were to build a coal or gas-fired power plant to power up those data centers, people would like it. So, for example, Apple in India is now purchasing a lot of their power from green energy plants and wind farms and solar farms. So, for example, we are providing a solution which is end-to-end a green power solution, a green data center. So, companies like Apple, Meta, which have big bases in India. For example, Amazon has the second largest facility in the world after Dallas, I believe, in the southern part of India, in a city called Hyderabad. So if you can provide them with green power, it's a no-brainer, and they're happy to meet the targets earlier, rather than spending money buying carbon credits and having these. They're happy to go with someone who can actually provide green power from day one, rather than just make it net zero.
But I think I would add this: some of the development of these markets it needs government support and intervention. India has been at the forefront of this, for a long time. They've had regulation in place where, as a colo operator, you can invest in renewable projects completely unrelated to your own data center, and you therefore can get the benefit of that investment from the power that's created back into the grid, and you get a cheaper per unit price. So initiatives like that are a start, but I don't think one provider can do it on their own, that's for sure.
So last question for you, given that we're wrapping this panel, a topic that's close to my heart. So given the new markets that we're looking at, given the APAC region, paucity of just the complexity of regulations, how are you weighing the build versus buy model? Do you think, would you go in favor of greenfield development or an M&A opportunity in looking at the APAC market? What do you think, John?
Look, I think in our DNA, we're a data center, a developer and an operator. And as I said before, Asia-Pac doesn't have enough data centers. So our initial propensity is to build. Now, having said that, if we go into a new market, and as we have, when we entered the Indian market, we were very clear we didn't know everything about operating in India, and it was going to be fairly tricky. So we partnered with Tata, and they already had a small platform, which gave us some expertise and gave us. So there was a reason why we went down the buy strategy. But as a default, we definitely believe, and our customers are driving us for more and more capacity in each of these countries. Buying someone else's data center that's already filled, that's actually more of a financing and capital strategy, not really in our.
And what about you, Zane? Any thoughts on that? Buy versus build?
I think, of course, each company has a different ideology. Some like to develop, some like to do M&A. I believe in this data center race that we are all sort of in right now, and the amount of, like Mr. Mark said in the opening session today, we acquired 300 gigawatts, 200 gigawatts, and the numbers just keep going up every day. I think a mix and match of both is required. Some M&A to sort of cut through the timeline, and you can buy and build and expand from there. Because it really does happen. Because sometimes we don't have time, I feel, right now to wait 3-4 years for data center projects. For example, as gentlemen, you all know, kind of like Elon Musk built his data center in 3 months. So, we are from the school of thought that takes 2 to 3 years. Most regular financing and land acquisition takes that time. But when you have, I think, when there's a will, there's a way. And if you do that sort of, you can acquire companies that have power shells or power land, and then you can go and do what's best for you. If you do a bit of both, I think you're right.
Great. Well, thank you very much, everyone, for joining us for this panel. And so you could just join me in thanking our speakers for a very insightful discussion. Thank you.